Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalysts talk. Today we're looking at Alpha Tau Medical.
If you find our talks useful, please consider subscribe, like, and comment underneath. Imagine trying to treat a highly aggressive form of brain cancer, right? But doing it without actually cutting open the patient's skull.
Yeah, I mean, it sounds completely like science fiction, honestly.
It really does. But, what if I told you there's a company right now that is literally replacing surgical saws with just a tiny, minimally invasive burr hole?
Right, to attack the tumors from the inside out.
Exactly. And the market is finally waking up to the reality of it.
Yeah.
So today we are looking at a stock that is aggressively breaking out. And this isn't just, random price action on a chart.
No, definitely not. We are watching this really fascinating transition unfold in real time. Alpha Tau Medical is moving from that early stage, kind of like, is this even feasible science project phase, directly into commercial validation.
It's a remarkable shift. But before we get into the mechanics of today's stock, we have a highly requested chart tool to mention for the investors and traders tuning in.
Yeah, if you want help reading your trading charts more clearly and finding these breakout zones, you can check out VIP Algos through the link below in the description.
Right, so VIP Algos is an educational TradingView indicator suite. It's designed to make chart analysis a lot more intuitive.
Exactly. It shows visual buy and sell chart alerts, advanced trend direction tools, dynamic support and resistance zones, and even specific areas for take profit and stop loss planning.
And it is incredibly versatile. I mean, it can be used across various markets, so stocks, forex, crypto, gold, indices, futures, and more.
But please remember, VIP Algos is an educational chart analysis tool only. It is absolutely not financial advice, it does not place trades for you, and it certainly does not guarantee profits.
Yeah, trading inherently involves risk, so always manage your downside and do your own thorough research. This is an affiliate link, so we may earn a commission if you use it at no extra cost to you.
All right, so let's ground this conversation right away and talk about the wealth building context.
Yeah, because when we pull a stock like Alpha Tau Medical apart, we need to understand exactly where this fits into a listener's portfolio psychology.
I mean, if you are someone who checks your brokerage account every single day and you just, panic at a 10% drop, this specific stock is going to give you a serious ulcer.
Oh, absolutely. This is a clinical stage biotech play.
That is the perfect way to frame it. You are not buying this for defensive stability in a turbulent market, and you certainly aren't buying it to collect some reliable quarterly dividend.
Right. This is an aggressively catalyst-driven growth story. You're stepping into the oncology space, which is, arguably one of the most innovative, rapidly evolving, and volatile sectors in the entire global market.
Definitely. And catching an oncology innovator early, well, it requires a very specialized mindset. You have to be looking at a multi-year horizon.
Usually what, like 12 to 24 months?
Yeah, exactly. 12 to 24 months to see any real structural change in the company's valuation.
Wait, so to be incredibly practical here, you are essentially tying your capital to a binary science experiment. You are just waiting on clinical trial results and FDA decisions.
Yes, that is the exact trade-off. A clinical stage biotech is inherently boom or bust. You are consciously taking on extreme clinical risk.
Right, in exchange for that extraordinary potential upside.
Exactly. The upside of catching a foundational shift in cancer treatment before it ever hits the mainstream commercial market. If the science works, the multiples expand rapidly.
But if the science fails, the floor completely falls out.
It does, which means we really need to talk about that science because the underlying mechanism here is what builds the entire business case.
Yeah, their proprietary technology is called Alpha DART, which stands for Diffusing Alpha Emitters Radiation Therapy. I'll be honest, though, the medical terminology gets incredibly dense.
It really does.
So what actually makes this different from the standard radiation therapy that hospitals across the world have been using for decades?
So to understand the breakthrough, we have to look at the delivery mechanism and the specific type of radiation being used. Standard radiation therapies often rely on beta or gamma rays.
Okay, beta and gamma.
Right. Think of beta or gamma radiation like using a high-powered sniper rifle to shoot a target inside a crowded room.
Okay, interesting analogy.
Yeah, so yes, the bullet will probably hit the target, but it is going to pass right through 3 walls and cause a massive amount of collateral damage to everything behind it.
Oh, I see. So in the body, that means damaging a lot of perfectly healthy tissue that's just surrounding the tumor.
Exactly. So that sniper rifle analogy makes sense for standard care, but Alpha Tau Medical approaches this very differently.
How so?
They are using what is called conformal alpha irradiation, specifically for solid tumors. Let's stick with the weapon analogy. If beta radiation is a sniper rifle, alpha particles are more like a highly localized hand grenade.
A localized hand grenade.
Wow. Yeah, alpha particles are heavy and unbelievably destructive to the DNA of a cancer cell. They shatter the DNA strands so completely that the cancer literally cannot repair itself.
But if they're that destructive, wouldn't that cause even more collateral damage?
Well, that's the genius of it. They have an extremely short travel distance. They can barely penetrate a sheet of paper.
Wait, really? Just a sheet of paper?
Seriously. So the innovation of Alpha DART is delivering these radium-224 impregnated sources directly inside the solid tumor itself.
Oh, okay. So it acts like a localized explosive that destroys the tumor from the inside out.
Yes, while completely sparing the healthy tissue sitting just millimeters away.
I want to stop and highlight that because earlier we mentioned replacing a sod of the skull with a burr hole. Are we talking about implanting microscopic radioactive seeds directly into the human brain?
Precisely. They use a highly specialized brain-specific applicator for minimally invasive burr hole access.
Instead of an open craniotomy.
Right, where a surgeon has to physically remove a large portion of the skull just to excavate a brain tumor, which creates massive recovery risks. Here, they can target the tumor directly through a tiny opening.
That is a staggering visual. And I think it completely explains why the FDA didn't just casually review this, but actually awarded them the breakthrough device designation.
Yes, and subsequently accepted them into the TAP pilot program. And we really cannot understate the value of that regulatory recognition.
Because it's not just a vanity metric, right?
No, the breakthrough device designation isn't just an award to put on a slide deck. It essentially gives the company a front-of-the-line pass for FDA interactions.
All right. It creates a highly collaborative, accelerated pathway with regulators.
Exactly, which acts as a profound competitive moat against any other company trying to develop similar delivery systems.
But, let's look under the hood at their financial health for a second. Because having a revolutionary science project is great, but keeping the lights on is another story entirely.
Oh, absolutely. The financials are always the reality check in biotech.
Right. They are a pre-commercial entity. So they don't have a product on the market generating regular sales yet. Their free cash flow is heavily negative.
Standard for this phase, but still tough to look at.
Yeah. And here is the part that I think sounds terrifying for a retail investor. Historically, they have raised a staggering $559 million to date.
It's a huge number.
$500 million burned before even reaching full commercialization.
It is an astronomical figure, I agree, but it really illustrates the harsh reality of the oncology space.
It's just that expensive.
Yeah, developing novel medical devices, running multi-phase global clinical trials, scaling up specialized manufacturing. It is arguably the most capital-intensive endeavor in the entire healthcare sector.
That makes sense.
But you are right to focus on the burn rate, because that historical cash burn is exactly why the recent strategic partnership with Tolmar is such a pivotal catalyst.
So let's break down that Tolmar deal, because this is really what triggered the current breakout.
Yeah.
Tolmar stepped in with an immediate injection of $35 million in capital.
Yeah.
And they structured that as a $20 million direct equity investment, and then $15 million specifically earmarked to build out a U.S. manufacturing facility.
Plus, the deal includes up to $161.5 million in future clinical, regulatory, and commercial milestone payments.
That's massive. So this partnership is a defining de-risking event for their balance sheet.
Definitely. And setting up a localized U.S. manufacturing facility, I mean, it isn't just a luxury, it is a logistical necessity.
Because of the radiation.
Exactly. Remember, we are dealing with radioactive isotopes. They have a specific half-life. You cannot simply manufacture these seeds in a single facility in Israel and ship them globally.
Right, without running into complex, time-sensitive supply chain nightmares.
Exactly. The $15 million from Tolmar basically solves that U.S. localized supply chain problem entirely.
I see the value there, but let me push back with a very skeptical, practical question.
Go for it.
So they have burned through a massive portion of that $500 million just to get to this current stage. And clinical execution, especially in the late stages, is notoriously expensive.
Oh, incredibly expensive.
So is an upfront $35 million from Tolmar actually enough cash to cross the regulatory finish line? Or are they just going to have to go right back to the market in 8 months and dilute shareholders again to raise more capital?
You know, it is the most important question an investor can ask right now. The $35 million is basically a bridge.
Okay, a bridge to what?
It funds the critical manufacturing scale-up and sustains the current trial operations without forcing the company to dilute shareholders at current market prices.
Got it.
But the true runway is sustained by those future milestone payments. Tolmar structured this deal very intelligently. They protect their own downside by holding back that $161.5 million until Alpha Tau Medical actually hits their clinical targets.
So the company's operational efficiency right now has nothing to do with expanding profit margins. It is entirely 100% focused on flawless clinical execution to unlock those milestone checks.
Exactly. Which brings us perfectly to the catalyst timeline. The runway is built, the cash is there, but hitting the clinical targets is the entire game.
Right. And the most highly anticipated upcoming milestone is the U.S. Regain trial.
Yes.
This trial is specifically targeting recurrent glioblastoma. And the FDA just cleared them to proceed with enrolling the final 7 patients for this study.
So to understand why the market is watching this specific trial with such intensity, we have to talk about what recurrent glioblastoma actually is.
It's pretty brutal, right?
It is one of the most aggressive, fast-moving, and notoriously difficult to treat cancers in the world. When it recurs, the options are historically grim.
But the interim data we have from the earlier patients in this exact study is genuinely groundbreaking. I mean, in those initial patients, they observed a 100% local disease control rate.
And a 67% complete response rate?
Wait, a 100% local disease control rate in a cancer that aggressive?
Yeah.
That is a staggering metric. It is almost unheard of in neuro-oncology to see a perfect control rate like that. But I have to play devil's advocate here.
Please do.
Cancer isn't a monolith. Every patient's biology is different. The first batch of patients might have had slightly different tumor characteristics than the next batch.
Absolutely. That's a huge factor.
So has the market already priced in a flawless finish for these final 7 trial patients? Because in biotech, 100% success often drops to 70% as the sample size scales up.
You've hit on the exact tension in the market right now. The market is currently pricing the stock with an incredible amount of optimism. It's almost assuming that the 100% control rate is a guaranteed baseline.
Which is dangerous.
It is. The biological variability you mentioned is the great unknown in oncology. However, the optimism isn't solely resting on brain cancer.
Oh, what else is there?
Beyond the Regain trial, the company has upcoming data presentations from the AL protocol at Hadassah Hospital. This is a broad access study testing the boundaries of the AlphaDART technology.
Testing it on what exactly?
We are looking at potential expansion into liver and pancreatic cancers.
Liver and pancreatic cancers. Wow, that fundamentally changes the valuation model.
It really does.
We aren't just talking about a niche neuro-oncology treatment anymore. We are talking about opening up massive, entirely new addressable markets.
Exactly. And when an oncology innovator drops a 100% disease control rate in early data and then secures a multi-million-dollar partnership to expand, well, you expect a violent reaction on the stock ticker.
Right. So has this clinical win actually translated to the price action? Let's look at the chart. Because all of this underlying fundamental news is creating a really fascinating technical setup.
Oh, it definitely is.
Following the official announcement of the Tolmar deal on June 3, we saw a sharp gap higher on incredibly heavy volume. Alpha Tau Medical was lighting up scanners across the market as a top-moving healthcare stock.
And that gap up on heavy volume is what technicians call a psychological breakout. It wasn't just retail traders buying the news.
Because retail alone doesn't generate that kind of volume, right?
Exactly. That kind of volume indicates that institutional money, so funds and large-scale investors, were stepping in to establish foundational positions based on the validity of the Tolmar partnership.
So where are the levels right now? Market analysts have mapped out some very clear structural zones, right?
They have. The baseline support, basically the floor that buyers seem willing to defend, is sitting firmly around the $15 mark.
And what about overhead?
There's an overhead resistance target set near $17.
Okay, $15 floor, $70 ceiling. And actually tracking these aggressive, catalyst-driven biotech breakouts and finding those specific support and resistance zones is exactly why traders utilize tools like VIP Algos.
Definitely.
When a stock violently gaps up on news, finding that new established floor is critical. So, we always have to maintain that chart patterns show us statistical probabilities based on past behavior, not future guarantees.
Absolutely true. The price structure shows us the mechanics of how the market is digesting this influx of clinical and financial achievements. But the sentiment behind that price action tells an even deeper story.
The story about where the smart money thinks this is heading.
Precisely.
So what does the market sentiment actually look like right now? Because from the outside, the narrative appears overwhelmingly bullish.
It really does.
I mean, we saw Barclays recently initiate coverage and immediately raise their price target from $15 up to $17, handing it an overweight rating, and H.C. Wainwright stepped in and reiterated their buy rating with a solid $15 target.
Yeah, analyst upgrades always help drive momentum, but the institutional conviction is what you really need to pay attention to. We need to look much closer at the mechanics of that $20 million direct equity investment from Tolmar.
Right, because Tolmar did not just log into a brokerage and buy shares on the open retail market.
No, not at all. They negotiated a direct buy-in at $11.99 per share. That figure is crucial because it represents a substantial 25% premium to the 30-day volume-weighted average price at the time of the deal.
Let's break down why that matters, because that's huge. The volume-weighted average price, or VWAP, basically smooths out the erratic daily price swings, right? It shows the true average price over a month.
Exactly.
So Tolmar looked at the true market price and essentially said, we are willing to overpay by 25% right now.
Yes, that means they believe the stock is fundamentally undervalued based on what they know behind closed doors.
It is the ultimate form of insider conviction.
It really is. When a major commercial healthcare player pays a 25% premium, it speaks volumes. Tolmar had the opportunity to look under the hood before signing the check.
They saw the real data.
Right. They reviewed the raw clinical data, they audited the proprietary manufacturing plans, and they definitively decided that the Alpha DART technology was worth significantly more than the valuation retail investors had assigned to it.
And that kind of heavy institutional flow always sparks speculation too.
Oh, always.
There are currently unconfirmed, what I'd say highly plausible, rumors swirling about future partnerships.
Okay.
Because Alpha Tau Medical strategically retains the global rights outside of the U.S. prostate and bladder markets.
Right, so there is significant market chatter about potential licensing deals for their pancreatic and squamous cell programs in Europe or Asia.
But we need to hit the brakes here. If the narrative is overwhelmingly bullish, that is exactly when retail investors get blindsided.
Definitely.
We have to balance this upside by examining the bear case, because the risks here are severe.
I completely agree. The most critical risk staring investors in the face right now is execution risk. As we discussed, a 100% local disease control rate in brain cancer is staggering, but binary clinical trial failure is always on the table.
Because that perfect control rate might not hold for the final 7 patients in the REGAIN trial.
Exactly, and we cannot stress this enough. Any severe adverse events in those final 7 patients will halt the trial immediately.
That is the ruthless reality of oncology trials.
It is. If the FDA sees an unexpected safety issue, the momentum stops instantly. The clinical timeline gets delayed by years, and the stock will react violently to the downside.
Which feeds directly into the valuation risk. Some market analysts are looking at the chart and warning that the stock already looks fully priced.
Yeah, priced for perfection is the phrase.
Right. Because Tolmar paid that 25% premium, and because the early proof of concept data was so heavily publicized, a massive amount of that future upside is basically already baked into the current share price.
That is the danger of investing when the narrative assumes perfection. If the next data readout for those final 7 patients is just, okay, let's say it shows a 70% control rate instead of the miraculous 100%, the stock could face a severe pullback.
Right, because the market is currently pricing in exceptional data. Merely good data might not be enough to hold these $15 to $17 price levels.
It is a high-wire act. The technology is undeniably innovative, and the capital injection provides a solid runway. But the clinical execution from here on out has to be virtually flawless to justify expanding the multiples further.
Okay, so putting all the science, the cash burn, the 25% institutional premium, and the binary clinical risks on the table, what is the final verdict?
Based on a synthesis of all this, the bullish score sits at an 8 out of 10. The overarching stance here is speculative bullish, falling firmly into the high-risk, high-reward category.
What's the timeline we're looking at?
The time horizon is definitively a multi-year hold. Specifically, we're looking at a 12 to 24-month window. An investor has to be willing to hold through the full REGAIN trial data release and the physical completion of the U.S. manufacturing facility to really see this thesis fully play out.
But as always, this is an analysis of the landscape, not financial advice. You must make your own investment decisions based on your personal risk tolerance.
Absolutely.
And if you want a cleaner way to read your trading charts while navigating these volatile biotech setups, check out VIP Algos through the link below in the description.
Highly recommend it.
VIP Algos is an advanced TradingView indicator suite featuring visual buy and sell alerts, trend direction tools, support and resistance zones, and TPSL planning areas.
Mhm.
It can absolutely help make charts easier to scan, but remember, it is still only an educational chart analysis tool.
Right.
It is not financial advice, it does not place trades for you, and it does not guarantee results. Trading involves significant risk, so always do your own research and manage your downside. This is an affiliate link, and we may earn a commission at no extra cost to you.
And if this analysis helped you better understand the mechanics of the market today, please subscribe, like, and comment underneath. We'll see you in the next Smart Wealth with Joshua Talk.